one pandemic, three end goals. And you look at the cybersecurity lifecycle powered by YL Ventures is all about navigating today's competitive landscape from the viewpoint of cybersecurity founders, investors, and customers, and learn how each group has adapted to this unprecedented times. The following 3 fireside chats will cover the impact of COVID-19 on due diligence, vendor assessments, and startup strategies to understand how each group has continued propelling the industry through tough times. Our first fireside chat, the investor angle, is with John Brennan, partner at YL Ventures, and Dave DeWalt, founder of NightDragon and former CEO of McAfee FireEye. Guys, the stage is yours.
Hello, everyone. My name is John Brennan. I'm a partner here at YL Ventures, and I'm honored to be chatting today with Dave DeWalt, founder and managing director at NightDragon and former CEO at FireEye, McAfee, and Documentum. First, I want to thank you all for joining us today as part of this year's virtual Cyber Week, which YL Ventures is once again proud to be sponsoring. For those of you who don't know YL Ventures, we are a venture capital firm with just over $300 million under management, and we invest exclusively in Israeli seed stage cybersecurity companies. We're supported by our 2 offices, one in Tel Aviv and one in Silicon Valley, and we leverage our large team and global network to support our portfolio, which currently consists of 11 companies. Today, we're going to be discussing the topic of the cybersecurity lifecycle through the lens of the current pandemic. And to kick things off in our first segment, I'll be chatting with Dave here about the investor's perspective, though his personal experience, of course, stretches far beyond just that. And so before we dive in here, I'll ask Dave to kindly introduce himself to our audience.
Thank you, John. Thanks for having me. And YL Ventures, thanks for being a great partner to NightDragon, too. It's wonderful to work with you guys. And welcome to Cyber Week. I can't believe it's sort of a virtual Cyber Week. We've been going to Cyber Week for years, and this time we got to do it online. So I guess greetings to everybody who's going to be watching online. So my name's Dave DeWalt. As John said, I've been in cyber now for almost 20 years. 17 years I've been a CEO. I always say it's like dog years being a CEO of public companies. 68 quarters. It was like 68 years being a CEO. But I retired from being a CEO of FireEye and before that McAfee, and founded this platform called NightDragon. So we do investments and advisory now. I've done almost 40 different investments now in this marketplace through a number of different lenses. I'm one of the partners in Team 8, which you probably know, John, really well. It's an incubator and foundry out of Israel. And we also have another incubator out of Maryland area called Data Tribe, which we do a lot of work with. But we just have been working on NightDragon's funds and growing them. And it's been a wonderful time just investing and advising CEOs from all over the world, maybe giving a little bit back to the cyber markets from a lot of the things that I got to learn during those 17 years as a CEO. So a lot of fun. I also chair safety security for Delta Airlines. So maybe some things we could talk about as my lenses from seeing threats around the world through an airline. I also have a lot of work I do with the government of the United States. I serve the National Security Telecommunications Council now for the 3rd term, 2 terms with the Obama administration, 1 term with the Trump administration. And I'm TSSCI cleared and have a lot of access to government and things. So I could go on, but 14 boards as well, and a lot of fun. So all good. There you go.
Awesome. Thank you. And maybe afterwards, I'll get some time management tips from you, because I would like to be half as productive as you apparently are. So I want to start with a pretty basic, but actually a very important question. And that is, should investors be assessing potential investment opportunities through a different lens, given the current state of the market?
I think there's a lot of ways to look at that, John, honestly, but I think the short answer is yes. I mean, we live in unprecedented times now. I mean, it's hard not to kind of see the perfect storm, as I like to say, in crisis management that we have. It was horrible to say, but, not just the pandemic crisis that we're all dealing with all over the world now in, our 7th month of this, but we also now have a pretty extraordinary economic crisis around the world. The unemployment rates, at least the United States, are at record levels, and probably getting even worse now as the CARES Acts in the United States start to wear off. And then you throw the cultural crisis in place, and the government crisis that we have, and even climate issues that we're dealing with, and it's creating a perfect storm. And the outcome of that is we're getting the most elevated threat environment that we may have ever seen in my 2 decades of being a part of cyber. And one thing I've learned during my time has been whenever we see an elevated threat cycle, we almost immediately see an elevated spending cycle to counteract that. And then we watch an elevated investment cycle to take advantage of opportunities that are there. And you can go back in time 20 years from quantity-based attacks, viruses, Trojans, to quality-based attacks like APTs. So here we are in this COVID window. And yeah, we're looking at it different because everybody's working from home. There's new ways to connect. There's new architectures that are getting more and more inertia. And I really do think, the short answer there again is we got to be thinking about things in a much different way because the spending and the threat land cycle are so different.
Absolutely. That makes sense. And, I know from our perspective on the ground in Israel, we're seeing as many great founders tackling very large solve problems as ever. And so, in some ways, of course, we need to be careful, and we'll talk about portfolio management in a minute. But when it comes to new opportunities, as long as we have and you have the dry powder, in some ways it's business as usual, and there's still very large unsolved problems in this space. And as you said, a lot of those are now magnified.
Absolutely the case. And when you look at the first month, I remember April like it was yesterday in some ways, because it was one of the most extraordinary moments for me, at least from my history of cyber, was watching sort of this acceleration of new categories that we hadn't quite seen before that we hoped would come, but all of a sudden that crossing the chasm kind of took weeks and months as opposed to what can take in some of these markets, years. And so it was just really interesting timing to kind of see. And I guess in one way, being an investor and an operator in this market, I guess, may you live in interesting times, as the old Chinese saying goes, which is a little bit of a curse and a blessing too. And here we are living in interesting times and interesting opportunities as investors and operators in what we do.
That makes a lot of sense. And I'm actually going to ask you a question that I was going to ask later, but it's related to what you just mentioned. So, I've been talking with a lot of people, especially chief information security officers. And what I've heard is, listen, this pandemic hasn't really changed trends so much as it's accelerated them. So a lot of what we're seeing now that's exciting is just an acceleration of what was already in motion. What domains within cybersecurity do you think are the most interesting when it comes to finding new opportunities?
I think the biggest for me, John, maybe, and in no particular order, because there's 2 or 3 of these, but maybe the biggest one is the rise of SASE, I like to think of. And you know this well, secure access service edge technology, really born in the cloud, built for the cloud, access through the cloud is really what we're seeing now. This is, Gartner and others are seeing this as a $25 billion market now. And with everybody sort of working from home on shared personal spaces and professional spaces, how do we connect securely instead of backhauling through a network like we were with VPN access, which is highly inefficient, direct connect to the cloud through containers, through new cloud gateway technologies, through security defense in depth. The SASE market is not just here to stay, it's here to dominate, in my opinion. And we're watching players and valuations in almost, epic proportions right now in terms of the technologies that are of interest. So that's clearly one. The other one, real quickly, that I've seen that I was surprised at, but now in hindsight, I'm not. And that's just the basic managed services market. When you sort of look at it from all the lenses I have, and I even sit on the board of Optiv, one of the largest North American security VARs, some of the product spending kind of shifted and changed. Overall, still pretty high, different vendors doing well, but the areas of services and managed services really accelerated. And that turned out to be a global trend. And a lot of it was staffing issues, being able to work from home and augmenting. And I think everybody now knows, like, not just managed security services like MSSP, but MDR and XDR services and other types of detection and response augmentation across everything from cloud to endpoint to network, mobile, and so on, has become kind of a fabric as well. So I thought managed security service, and probably the last one that I saw a big pickup was just cyber training. You can just see it. Like everybody's got to get retrained, because not only are we working from home, like, wow, email spear phishing, everybody knows to be careful to click on a business email. But now we're working home and we got WeChat, WhatsApp, we've got Slack, we got Box. And what kind of security is sitting on all the DM models for that? Not much. So how do we get infected through other routes that we never seen before? So spear phishing has been explosive right now, and defense to get behind and secure that is equally as important now, not just email. So there's a lot of trends that are happening that look like they just took off, and they're here to stay. I could probably go on and on about 5 more categories, but yeah, a lot of interesting things.
That's great. And, I think one category that's really emerging, and it actually touches certainly on the first 2 areas you mentioned, and also the third, is the extended detection and response, or the XDR market. And I think that's something that we're hearing from customers, we're hearing from analysts, and we're certainly seeing a lot of in the market.
And I know you've done some new stuff, John, too. So that's great. I think you guys at YL are doing a great job finding hot new areas, investing in these areas. But no, I really believe in that, right? As a former FireEye CEO, even a few years ago, we watched the EPP space extend to the EDR space, then extend to the MDR space, now extend to the XDR space. And basically, you need full visibility, full response across all your architecture, whether it's on-prem, in the cloud, hybrid, private, whatever it might be. And you're going to have that visibility, because if you don't have visibility, you can't respond. And I always say, it's kind of like an XY axis. The faster you can patch and the faster you can respond means the minimum amount of risk. The longer it takes to patch, the longer it takes to respond, the greater the risk. It's kind of a simple security measure. But if you can create better visibility, patch faster, respond faster, less risk. XDR is a very hot area coming for sure.
Great. And I always love when those hot areas are validated by customers and not just the analysts. So this is one where I definitely think we're seeing a big pull from the market, not just a push from the supply side. I do want to jump back a step. And so you mentioned 14 boards. You're active in so many different areas of cyber, and including across different stages. I'm curious, if we go back in time now, what actions did you take, or what advice did you give across your portfolio when this crisis began? And especially, if there were any advice that you gave that was particularly prescient, or maybe some advice that now, looking 6 months in, 7 months in, maybe wasn't so relevant?
Yeah, John, it's a great question. I always start with a little history. Part of my greatest learnings as a CEO happened during crisis management. It just is. And one of them was at my McAfee days. I remember this day like it was yesterday, April 21st, 2010. We accidentally sent out a faulty DAT release. And this was an update of our virus software that wiped out several million computers. In fact, 1,672 companies. The point of the story was it created such a chaos and crisis for McAfee as a company. But my learned lesson in that was what an opportunity as well. And what we ended up doing at McAfee is responding in such aggressive format for our customers that the empathy, sympathy, and ultimately loyalty that came out of that crisis was greatest thing that could happen. Eventually, one of those customers, Intel, bought my company for $7.7 billion in cash, the largest all-cash transaction, and a silver lining came out. Long-winded way of saying I said the same thing in April of this year, which was, here's a crisis. And here's an opportunity. Those who step back from the stage or step back from the danger, they miss it. Those who step forward in that window win it. And here we are with some of the greatest secular shifts in cyber history, all happening in a relatively short period of time. Those who put the accelerator down and took advantage, those who hugged their customers, those who really went out of their way with customer success, those who went out of that pays off in dividends later. And you can feel that with the company. So every one of my companies was like, this ain't a time to take off like a vacation. This is a time to engage, because your competitors, if they're backing off and you're winning the market, you win for a long time. So that was the biggest advice I had to every one of my companies is time to step forward, time to be aggressive, time to win the market, because customers need you right now. It's not a time to be salesy. It's not a time to be marketing. It's a time to be support oriented. And, those companies who did well with that, in my portfolio, their valuations jumped over the last 6 months. And those who took a step back, which wasn't really any of them, but I know companies did, they froze. Oh my God, I got to take the PPP. I got to do some sort of, budget analysis. They lose. And so, that's just the spirit of what you learn as, executives in this business.
Yeah, absolutely. And I love what you said about hugging customers and focusing customer success. I mean, it's good advice in any time, but especially now, both in terms of the value that security vendors are providing, as well in some cases, maybe being a little bit flexible on terms and just making sure that you're serving your customers and helping them. From a go-to-market perspective, that's always a good recipe, but especially at times like this, in speaking with customers, speaking with CISOs, that's the kind of stuff that they remember.
And John, I mentioned at the beginning, Delta Airlines is a board. I don't talk about them very often, but when COVID hit, some of the biggest industries affected, probably the biggest was the airline industry, the travel industry. And, at one point, we had 97% of our aircraft parked in the desert. We only had 3% flying. We're losing $100 million a day. I mean, we were looking at, catastrophe scenarios. And, during that time, we were also watching the greatest threat environment come up. So here we are trying to work from home, losing a lot of money, hardly able to operate our model. What vendors do you think did well in that area? Those who came to help us, those who really hugged us, not the ones who tried to sell us something new, or I can fix this or that, or I'll sell you some new, and emails are flying. Those who came to help. And a lot of them offered us services and capabilities and managed services that helped us. And guess who we're loyal to now as we come back out of it? Those are the vendors. So, that's what I say about a crisis is, never let it go to waste. It's an opportunity too. And we're still in the middle of that. My humble opinion, we haven't even seen the worst of the crisis yet. And I'm not trying to be ominous, but in the next 3 months, post the elections in the United States, we'll probably see some of the worst scenarios in the history of cybersecurity. We're already seeing them. But as we get through trying to count the voting systems in America, what's going to go on with the judicial system afterward, this is going to be an interesting time, and an interesting time to help your customers. So, not to be ominous, but it probably will be that environment. And that's the reality. We have a mission and we have an opportunity here as a cyber industry to help provide peace in the world. We'll probably need all the help we can get in the next few months, at least from the Western world point of view.
Unfortunately, I agree with you on your outlook. I don't think it's too ominous at all. I do want to make sure we cover one topic, and speaking about trends in the industry. And first, I should congratulate you on the latest funding round of Elusive Networks, and where I think you were the vice chairman. And in commenting on the funding round, you said something I found interesting. So, despite massive investments, enterprises continue to suffer data breaches. We actually haven't spent a lot of time so far today talking about data breaches. What's driving this trend, and what are practitioners saying about data security specifically now in the pandemic?
Yeah, I mean, this is again one of the most interesting times that we've had, and what do we, when you look back, I always say in history, you've watched like what would occurred was we usually had all this like nuisance kind of threats that gave rise to crime, which gave rise to espionage, which gave rise to almost cyber warfare and terrorism in this domain. And here we are. I hate to call it a shit sandwich, but it's kind of what it is, John. Like we got all this IP theft around the race to vaccinations and healthcare. We've got this election information, disinformation, sandwich that's occurred in the United States. We got China on one side, Russia on the other, all with diametrically opposed views. And it's really creating, an interesting situation that we hadn't ever really seen before. So, long-winded way of saying again that, I think we're in for some challenging times. And again, we're going to see, particularly from data security, this is really where it's at. How can we not just secure data from like encrypt it, not just at rest and in motion, but how do we prevent data manipulation? And this is really what we're seeing. And deep fakes like I know, and that disinformation campaigns are very powerful now with AI offensive tools. And the news systems that we have are so viral. What do you believe is real? What don't you believe is real? Just start with consumer data security. And then you get into enterprise data security. It's at a whole nother level. So I really see that as another category that's critical, not just for stealing information, but for manipulating information. The amount of attacks that we're seeing, they didn't steal one piece of data, but they're manipulating data. And that's even more catastrophic in some cases. So, a lot of challenges in that space, long-winded way of saying, yeah.
Thank you, Dave. Well, listen, I think we hit on a bunch of great topics today. Unfortunately, we are out of time, so we didn't get to everything. I want to thank the Cyber Week organizers again for the tremendous work they've done putting this event together. And of course, Dave, I want to thank you, a great friend of Wild Ventures, who usually is over there in Israel with us during these times. And lastly, thank our audience. Thank you for tuning in. And if you have any questions or comments about what we discussed today, please feel free to reach out to me. I'm easy to find on LinkedIn or at john@wildventures.com. Dave, thank you so much.
Thank you, John. Thank you, everybody. Have a good day.
Thank you both. The CISO angle is up next. I'd like to invite Sonil Yu, CISO-in-Residence at YL Ventures, and Lakshmi Hanspal, Global CSO of Box.
Hi, and welcome to the second portion of our session where we'll look at the impact of COVID-19 from the CISO's angle. I'm Sonil Yu, the CISO-in-Residence at YL Ventures and the former Chief Security Scientist at Bank of America. Today, I have the pleasure of having as our guest, Lakshmi Hanspal. I'll let her introduce herself. Lakshmi?
Thanks, Sonil. I'm the global CISO for Box. Box is a leader in cloud content management, and my responsibilities span across all aspects of trust, building trusted products, maintaining and operating trusted environments, and advocacy of trust to customers and partners. So very glad to be here. I think the topic, Sonil, that you shared is very, very much top of mind for many practitioners such as ourselves. And as I am, as we're having a conversation here, I'm looking forward to hearing from the audience as well.
Yeah, so before we jump in, I do want to remind folks that they're welcome to ask questions in the chat. So feel free to throw any questions as we go along. So let's dive right in. COVID's affected everyone in pretty drastic ways. I think by now we would have hoped that this would have been over, but it's going to happen. It's going to continue for some time. Well, what's been the biggest adjustment that you've had to make to your security posture since the onset of the pandemic?
So I believe that, so within my role, I have resiliency responsibilities as well. So business continuity, disaster recovery, crisis, and many practitioners, we believe that we go through tabletop exercises, we go through real world exercises, but I don't think anyone predicted to the scale and longevity of how much this pandemic would affect us. So in a scale of being highly prepared to being unprepared, many organizations are within that range, trying to understand what are their amplification of risks, what decisions need to be accelerated, and what are the gaps in the environment. Within my own role, so first thing for me was people, right? When we have this within 24 to 48 hours, when we had become fully remote, it was important that the team members, our customers, partners, understand that we're in this together, we're a partner and a practitioner first, and that this journey is going to be a combined journey with us, right? So for our teams, it was necessary to over-communicate, ensure that we are keeping track of information flow that was needed to have a sustaining environment. Now, within our operations, not much changed because we were already prepared for secure remote environment. So not too much lift, shift, pivot from an operation standpoint. We did tweak from a threat landscape perspective. We did tweak some of the anticipated phishing campaigns and malware campaigns and others that could be on the rise. And 7 months hence, we've seen some of that data corroborate some of the rise in that. So we had tweaked on that. But more importantly, I think it was important to be there for our customers and for and to be part of the journey in which they were trying to figure out their plan and their journey on secure remote work. And being there meant a number of things. Having that customer zero narrative, helping them accelerate their decision making, helping them accelerate some of their deployment as well. And most importantly, helping them understand that this is a sustainable way to work without disruptions to their businesses. We have many life sciences customers, and they, as you know, many of them are in the search for a vaccine. So we needed to support some of those efforts as well. So across these four: people, technology, process, and customers, I would say that there was a range of pivots that needed, some very little, some more. But ultimately, it was important that continued business resiliency as a core competency is maintained, and then continued operations and monitoring is sustained.
So as a SaaS provider, you kind of hinted at this in your response just now. There is a shared responsibility model that's in play. Can you help us understand how has the balance of the shared responsibility model shifted and evolved in terms of what the customer should be doing and what the vendor should be doing? I mean, I guess what sort of lessons have you learned, or do you think that we can learn from these shifts that you think founders should be aware of as they build SaaS companies of their own?
So when you think of SaaS in general and operating in the cloud, the balance of responsibilities, it's a balance. It continues to evolve. I can think about in 2005, 2008, early days of cloud adoption to where we are now, 12, 15 years hence. The shared responsibility model between customers and providers still exists, right? So, and what does this mean? It means that there are certain depth of business domain or decision-making or policies that the customers know best than providers. And of course, there are certain depth of identity management and threat management and monitoring and logging and detection and automation and everything else that you would expect from a provider that comes innate or built in, not bolted on from the provider, right? But the shared responsibility model, in my mind, has evolved over the years. I remember conversations in 2005, 2008, when providers used to say, bring your own, right? Bring your own encryption, bring your own inline obfuscation, whatever that may be. And now it's become part of 101, what you would expect from a provider to bring. So that having that model being evolved, shared responsibility still means that for example, user onboarding and offboarding, you know best the users in your environment, the roles that they need to have following least privileges, and the termination in terms of termination of particular access in terms of role change or leaving the organization. That is not something the provider would know. But in terms of the provider, in holistic threat landscape, smart access, threat detection, classification, all of those, the provider is best suited to do that in a mass adoptable scale, sustained scale for all customers. So then customers rely on that. So shared responsibility model, very important for current founders. If you're thinking about your own company, think about having that conversation with customers or even listening to them on what they believe a shared responsibility model should be for your area of expertise.
Okay, that's wise. Good wisdom there. I'm curious, though, so let's go back to COVID for a moment. You hinted at in your opening statement around some of the shifts in the attacker patterns. Can you give us some more insights in terms of how you've seen these attack patterns change during COVID? What changed in their TTPs? How did they take advantage of the situation in ways that were unexpected?
So what we see in the data, so when we think about techniques, tactics, and procedures being used, the TTPs being used, I don't believe that there is direct correlation that this may be related to COVID in some way. These could have evolved if we had just continued to operate normally this year as well. So I'm not giving full credit to COVID, but I am. Yeah. What I do see is that there are shifts in our working environment. So think about it, Sonil. We're all working from home and we're all working from anywhere. So social distractions are at an all-time high, Second, the layer defenses on endpoint to connectivity, to secure Wi-Fi, to other types of connectivity, the layer defense on access that may have existed in an office aligned location or office environment may not exist consistently across all environments of access right now. So what's happened is that the TTPs that we've seen evolve are trying to test the boundaries of social distractions, are trying to test the boundaries of the layer defense of connectivity, and are also trying to test the boundaries of responsiveness when any sort of lateral movement or compromise that would occur. So across all of these three, we're seeing some sort of activity. But one thing is common across those phishing campaigns or malware campaigns have continued to evolve even pre-COVID, and we're seeing signs of that continue to evolve within this year as well. So, and the only difference being that they can now evolve with COVID-related themes, which can play to the fear factor in individuals, right? Like whether it is about symptoms or getting tested or results or whatever that may be. I think there's an exploitation of current nervousness that is manifesting in these campaigns.
Yeah, I think there's also an exploitation of since people now have to work from home, some of the assumptions that we may have around how we trust, for example, new hires and whether or not there really are a new hire. And I think we've seen attackers exploit that sort of some of the underlying assumptions with new hires through some of the phishing attacks that we saw as well. The phishing attacks are things that we've seen for a while, but they've been able to take advantage of the unique circumstances around the additional trust that we have to give or impart to new hires that we've never seen before, and somehow be able to convince the person on the other end that, yes, I am this new hire that you've never seen before. And there's really no way to validate that, right? And so we find ways in through those sort of tactics and techniques.
I think with the identification, the recognition and acknowledgement that we emerge unscathed from the situation that we are in currently and set foot into a new digital frontier, a net new normal. And that new normal definition is across multiple, I think, a spectrum. When I think about the new normal, I think about how do we continue to maintain camaraderie in a hybrid environment where we have semi-permanent or permanent remote workforce with an office-aligned workforce as well. How do we sustain layers of trust? We just spoke about that, you know, in the new hire context, but I'm talking about in a larger context, how do we sustain those layers of trust? And the third one in new normal is quite exciting for me. How do we go and talk to talent that we may not have accessed before because we may have had a highly office aligned location strategy, and now we're perhaps open to talent that is earlier in experience or not office aligned location, and they're what we would call remote locations in some ways. So I think those are all very exciting for me to look at what the new normal might be. But also it's important to understand that the new normal is going to come with its own challenges as well. So when we think about, let's say, business continuity, disaster recovery, crisis management, everything that builds resiliency as a core competency, right? Mm-hmm. In the new normal, that is going to be even more critical than it was before. When we think about event correlation and the sensitivity of triggers put around it, I don't know if geolocation sensitivity is, I wouldn't say relevant. I think it's still relevant, but I don't know how much weightage it would have versus a user behavior pattern change, right? So Lakshmi is accessing some data from a location she's never accessed before. Is probably not going to be as alarming as She's accessing from location she hasn't accessed before. By the way, she's accessing content that she hasn't accessed before. And the patterns of collaboration and downloads and all of that doesn't seem to be matching the baseline. I think that, so the event correlation, the run books that we would have, I think we're all continuing to go to tweak at saying, what is sort of decreased in weightage of where we cannot rely on geolocation sort of anymore, and then what do we up the knob, what do we turn the knob in sensitivity in other types of triggers that are going to be catering to more actionable intelligence for us from a threat perspective.
I wonder then, so some of those are technological measures that we have to account for. Are there any procedural measures that we may want to retain for the foreseeable future?
I think the first procedure that comes to my mind is, what does reentry look like? Right. So when we say the new normal, we're saying some form of reentry. And so I think life and safety is still paramount for all organizations, for their customers, for their users, for their employees. So there's a lot of conversations on how does reentry look like? How does reopening look like? And how can we do it safely in a way with herd immunity in mind, right? So we're all learning from those conversations. There's a lot of sharing that's going on between practitioners on this. Box had to open up the Tokyo office July 1st. The Tokyo office is still open, and there were a lot of things we learned in going through that exercise for that region, right? That we plan to apply to other regions when they're ready to open. The other thing I think about in terms of procedures is, again, going back to runbook updates, right? That is, are we doing enough tabletop exercises? Are we doing enough real world exercises? Can the current scenario and a new normal not be reasons for pause on those hygiene that needs to happen in terms of those exercises? But how can those tabletops and real world DR, BCP, whatever those are, continue? And the third one in new normal for me is about third party and supplier audits. We had a pause on on-site audits, and then we shifted to virtual audits. I think virtual audits may be the way to go. And so I'm looking at other vendors. Many of you are entrepreneurs in the third party space, looking at you saying, as practitioners, how can you solve our audit needs for third parties as well in a way that is sustainable and secure?
Well, I'm sure there are a lot of people who will miss traveling to different locations for those third-party audits, but going virtual certainly is a huge cost savings and time savings. Well, one of the things that we hear, to wrap up, one of the things that we hear in our community often is that we should never let a good crisis go to waste. Although the COVID crisis isn't specifically tied to cybersecurity, is there an opportunity that was created by COVID that shouldn't go to waste in helping your cybersecurity goals?
Right. So there's nothing like change that accelerates decision making, right? To say that. I would say that this has been a great learning exercise for us in terms of sustained operations, in terms of 101 foundation excellence, further foundation excellence and maturity that we needed to build across techniques, procedures, people. But one thing I would say in terms of in terms of, again, we're going to come back to the people aspect of it. Everybody is earning for a connection. And I think it behooves us as leaders, as organizations, to keep that in mind and think about how do we continue to create that connectivity among our organizations, among customers, among users, and among our employees. And that is the key to anything else that needs to be sustained from a technology standpoint, from a process standpoint, from anything else, right? So people come first, keep that in mind, and how do we continue to enable them?
Well, it looks like we're already out of time. So thank you very much, Lakshmi, for the time that you've given us to be able to share your insights on how Box has handled this crisis. I hope that the audience has learned a lot from the wisdom that you were able to impart upon us. And with that, thank you very much for attending our session, and we hope that you enjoy the rest of the conference.
Thank you, Sunil.
Thank you, Sonil and Lakshmi. Our final fireside chat is the founder angle with Ofer Schreiber, partner and head of the Israel office of YL Ventures, and Guy Podjarny, founder, president, and chairman of the board of Snyk.
All right, so this is the third part of this session, and after we've heard the CISO's point of view and the investor's point of view, it's time to get the founder's point of view. So my name is Ofer Schreiber, I'm a partner in YL Ventures, and with me is Guy Podjarny, founder, president, and chairman of Snyk. Hey Guy, how are you?
I'm doing well, thanks for having me, Ofer.
All right, so we do have a few questions about how Snyk is doing during these challenging days. I'm sure this will be very interesting. So my first question to you, Guy, Snyk obviously has been one of the hottest cybersecurity companies of this year. What factors played the biggest role in your success in recent months?
So I guess for starters, even coming into these sort of last months, we were driven by two big trends. One is DevOps, which changes the way software is built. So Snyk came with this dev-first security thesis or approach and everything we build, and that helped us basically help security catch up to DevOps and adapt the practices in a way that is developer oriented. So that trend continues. DevOps is now prevalent, and companies are reaching sort of the next layer of maturity in DevOps, and they understand that security needs to be a part of it. So that's been driving a lot, and I'll get to the last few months in a sec. The second trend that was driving it is cloud. And what we've seen is that with cloud, there's a whole bunch of responsibility that moved from IT security to application security. A lot of layers around network, around operating system, around central applications like databases. They've moved to become as a service. They've moved to become either a part of the cloud or a SaaS component, and the decisions around them moved to be done by developers. And so basically they become a part of the application, and they've also needed that sort of dev-first approach. And so both of those together have been propelling Snyk's movement, because we've been embracing both of those approach into what we think of as this dev-first, cloud-native application security. And in the last few months, what happened is businesses have basically gotten more digital. So the company, and we can talk about the business model, the company to begin with was set up in terms of the remote working. We have a bottom-up product. So there's a lot in terms of our go-to-market that was working. But at a high level, the market motion of embracing DevOps and cloud more has definitely not slowed down. It only accelerated. And that drove our growth, capitalizing on the more practicalities, if you will, of the go-to-market product-led growth that we had.
Yeah. And many tried to kind of crack the dev-centric security world, and not a lot succeeded. And Snyk is the perfect example of a company that did. So what are, I guess, some secrets that you can share with the audience regarding that specific success?
Yeah. I think I think we did okay here, and I would say the core of it is not really much of a secret. It's just conviction to this dev-first approach, and that's hard when an industry is transforming. It's hard to cater to that user when they're not necessarily the ones signing the check. And specifically, we had purely focused on developers. We built a product in sort of Snyk open source at the beginning around open source security, and really, literally for 2 years, we didn't go to security events. We didn't really aim to have conversations too much with security people. Our attention and our focus was entirely on being, getting developers to embrace the product. And we saw ourselves, we modeled the whole company on being a developer tooling company that does security. And so our kind of true north, if you will, right, our focus, what was the most important thing about the company, the product, the motion, was really that developer adoption. And everything else, you need to execute well, but everything else was a derivative of that. We designed a different product because of that. We designed a different go-to-market because of that. We designed a different pricing model, that is based on basically the size of the dev team, not some technicalities on like lines of code or the likes. But all of those were really symptoms of the conviction around developer first, and ensuring that we understand it. And I would say it's I make it sound, it's not that it's easy, and I think we managed to also build a good dev tooling company. But what was important as well is that we had strong convictions from our investors. So our investors understood with us that when you do this, when you think about developers as the most important user, even if security oftentimes signs the check, it means revenue is a second order derivative. You first need to build a product, then you need to get developers to embrace it, and then you can broaden the stack and you can provide the other needs that security teams needs, and actually sort of get the commercial piece working. So we were fortunate to have investors that also supported that, and that had the same vision, right, of what's most important about the company. And today we're ripping the fruit of that dedication.
Yeah. Now there is an inherent conflict or friction, not conflict, friction between developers and the security teams. And Snyk is a great example of a product that kind of like sits in the middle and meddles between the two. What's your view on this friction, and what are some ways to reduce it?
Yeah, I think it's changing a little bit, right? So even before you touch on Snyk, security is undergoing what DevOps has undergone. Security is oftentimes perceived as the team that says no, and prevents things from happening versus being a business enabler. They're vastly outnumbered by, compared to the development team sizes. And I actually talked to Kelly Shortridge, who framed it well as that, like, right now they're frenemies. They're they have to work together, but there's a lot of conflicting interests. And so I think security needs to undergo the same change, and then security teams as a whole need to switch from more of a dictatorial kind of controlling approach to more of an empowering bottom-up approach. I like to say that it's not about shift left; it's about top to bottom. It's really about sort of switching to this sort of bottom-up security angle, and so that's the change on the security side. And I think they require a change in tooling as well. Like, it means that the tools need to be minded to be able to allow security teams to govern successfully in the type of surroundings. So they need to see what developers are doing, who's embracing what. And then on the dev side, there's kind of this cynical view that says developers don't care about security, and I think that's false. Like, every developer in the world, if it was the same effort to build secure software or insecure software, every single one would choose to build secure software. And what we've done is we've made it easy. That effort is not equal at all to build secure versus not. In fact, it was just way too painful. It is way too painful with the industry's tooling today for developers to build secure software. So back to that focus on developers, the attention was of this is how much you care. This is how hard it is. We do inch up how much you care, but we dropped how hard it is. We made it a next experience for the developer. Yeah. And that's really the thing that paid dividends. So those are the two angles, and we need to make both of them successful for companies, for our customers to be successful, and subsequently for the business to succeed.
Yep, that's great. So let's talk a little bit about go-to-market, since you mentioned it, and I want to focus on the past few months. So my question is, how, if at all, did the pandemic impact your sales strategy or your go-to-market activities?
So yes and no. At the core, Snyk is a product-led growth company. So we have a freemium tier that is used by now 1.5 million developers, and very, very broadly used. And generally speaking, most of our growth, most of our deals are either come from the product, they are inbound, or they're expansions in places in which we've already had a foothold or some teams doing. All of those motions are almost entirely, and have been pre-pandemic, almost entirely virtual. And so the core element of it has remained the same. As you grow, you're able to do more than one thing, or sort of do more things in parallel. And there is definitely value in also accelerating our presence in conferences and our kind of in-person events, and some work with the channels, which tend to be much more in-person oriented. So those activities were underway, and this basically made us pause them, which had a dual effect. On one hand, clearly it hindered those specific efforts. But on the other side, it actually helped us focus on our core and on the things that were already successful. So at the end of the day, it actually probably was a smart move. When you grow, it's really hard to focus. There's so many opportunities, there's so many things to do, there's like a ton of money coming in from investors. So you're in a good spot, but maintaining focus is really, really hard. And I think what COVID has done, within the context of, being well-funded, having a team and culture that sort of withstood it well, and being remote friendly. So given the fact that those and the market conditions all were positive for us, it allowed us to focus our go-to-market. So today, we're still expanding in those other areas, but clearly those other go-to-market motions themselves are adapting to remoteness. So to an extent, they're coming into our space. We've gone to a lot more virtual conferences. We've invested in this. We've run a whole bunch of them. We're not unique in that. Many in the companies have done it. We might have been a bit more set up to do it. And beyond that, we're just sort of poured more fuel onto the product-led growth facet of the business.
Yeah. You did mention being very well funded. Obviously, you recently got funded by additional $200 million. Can you share some perspective about how is it to raise a growth stage funding during pandemic, during financial crisis, and I assume doing it remotely as well?
Yeah, I think the interest from investors hasn't swayed during the pandemic. In fact, it strengthened, and there's a certain, sometimes people call it a K curve happening, right? Which is certain industries and markets and perspectives are rising while others are declining. And we very much, with the sort of cloud transformation and our relevance to it, we very much belong to the part that has been benefiting. There's also an element of betting on the winners that has happened during a pandemic, that happens, I think, during every crisis, which is people are more seeking to invest in who they think is the winner versus take bigger bets or sort of risks on finding some sort of dark horse that might not have broken out just yet. So in practice, I would say the pandemic has probably fueled investor interest even more. We see the same thing in the public markets, right? You see, the latest, dev tooling and other sort of SaaS companies, and you see how well they're doing in the public markets. And so during the pandemic, it didn't really matter. It's a little bit weird to raise $200 million without meeting in person the people signing the check, and I think that was probably even more weird for them. But it's still the same. It's also worth noting that it's only a portion of this investment that came from a new investor, from the new lead investor addition. And actually, the majority of the round came from existing investors. So we've already had those relationships. They knew the business, and they just doubled down on it. So during the pandemic, it didn't really matter. It's always interesting to raise this type of growth round as you think about the implications. You're doubling down on the business. You're kind of reaffirming your conviction that this is an opportunity for a big, sustainable, kind of enduring company, and that these trends are not a passing fad or something that complements a feature in an existing company state, but rather a new foundation. And we've always believed in it, but every one of these rounds is an opportunity to demonstrate that conviction a little bit more. Yeah,
absolutely. And I want to continue to talk about growth, especially now during the pandemic, and talk about the key element of growth, which is human capital. So has the pandemic impacted your hiring process, both for junior talent as well as senior management?
It's an interesting question. So at the beginning of the pandemic, we froze hiring. Nobody knew what's going to happen. And in hindsight, I can talk about all these sort of tailwinds and how they it worked in our favor in many ways, but we didn't know all of that ahead of time. So out of caution, we froze. And once again, if I talk about focusing, it was actually from a hyper growth perspective, there was a lot of good to be said for getting 3 months or so of practically no hiring to stabilize, because we were hiring. We've gone from, forget the exact numbers, but something around from 25 people to 85 people to 250 people year after year. So there was an advantage to slowing down the hiring and just sort of stabilize a little bit. Beyond that, I think again so Snyk, maybe a little bit of context. So Snyk has been founded as a dual office, had London and Tel Aviv, just sort of distributed, but multi-office, not so much everywhere. And we had some remote employees, but we really invested in ensuring that even the teams are split at the team level between the two offices. So it fostered a foundation of remoteness. Everything is, we live in Slack and Zoom and in online documentations. And so the interview processes and all of that were already very remote, and they didn't really overly rotate on in-person meetings. This clearly took away, there was typically a final interview or some element of in-person meetings that this took away. So it wasn't a huge leap, but it did impact our recruiting processes. We were already hiring people remote. This accelerated some of that, especially within the countries that we already hire in. It's a little bit a bigger deal to hire in a new country. There's overhead, there's constraint about it. But it just moved up our willingness to hire people that are not, London-based, for instance, but in northern UK, right, or something like that. And basically over the summer, we've turned the ratchet back up and we're hiring substantial. I think we have some 50, 60, 70 odd jobs posted. In terms of senior hiring, we try to look ahead. So we try to hire, for starters, we look inside and we try to promote as much as we can. Clearly, when you're in this type of a growth rate, it is important to also bring external talent that has had more mileage in that specific size. So we do hire people from outside, and we continue to do that stretch down, if you will, to our size. And we've continued to do that. I would say it's independent of the pandemic. One thing that was a little bit weird is when you do hire them, you need to hire an executive and do that remotely. And that's a little unsettling. But we invested. I think you can compensate with just a lot of calls and spend that time you would have done taking someone to dinner and spending the casual time. I think we make the mistake of Zoom is very efficient. And so we reduce it to say, okay, because we're doing it on Zoom, we're going to do a 1-hour call. When in practice, you would have gone to dinner, that would have taken you 2 or 3. Take the 2 or 3, spend that time, talk through, have a beer with them on the video to try and achieve it. And we've made some amazing hires. One example of that is Pat Pauls, who just joined us as a SVP engineering from Eventbrite. And he actually relocated from the US to London, and he's recently physically moved here. Pandemic slowed down some visa processes, but otherwise it doesn't get in your way.
Yeah. Another question about growth, but this time about inorganic growth. So last month you acquired a startup called DeepCode, which is quite interesting, very interesting technology. And I was wondering if you could share with us some of the rationale behind the acquisition and what are your future plans for their technology.
For sure. So DeepCode is a program analysis and machine learning company based in Zurich, and really coming out of the ETH University there, which is probably the leading university in terms of those two fields, program analysis, machine learning. And we've acquired the company. It's a great company. It's a great set of people that we like. That always has to be at the top of the list. But really, what we've done there is we set out to kind of rethink static analysis and how do we help find and kind of address vulnerabilities in people's own code. And so we were already building towards this effect, and this acquisition was a great way to dramatically level up our ability to deliver there. But really, what we think DeepCode has done and that team there has built is an amazing capability to learn from the world's code, to understand all sorts of security and non-security aspects of programs. And that technology, that machine learning foundation and that team is actually applicable across our product line. So we've acquired this company, maybe there's the immediate goal of kind of helping accelerate our static analysis investments, but or offerings. But really, we think that this machine learning foundation would apply across the customer base rather quickly. Very excited about this acquisition and what we can do with it.
Yeah. All right, Guy, I think that we're running out of time. So I wanted to thank you very much for this very interesting session and to wish you continued success to you and the entire team at Snyk. Thank you very much.
Thank you, Ofer. Great having you. Great being here.